All right. Welcome back to the Business Exit and Acquisition Playbook. I'm Trent Lee here with a longtime friend, Dustin, who knows real ad backs versus fake ones. How to make sure you don't overpay, get caught with sloppy ad backs, get banks that are going to decline you because the ad backs aren't right, and what to generally watch for as a buyer as you go through the process to make sure that your deal doesn't collapse in due diligence. So by the end of the episode, you'll know exactly how to spot sloppy ad backs, test if they're real, if they'll pass the bank test, if they'll pass the basic buyer test. Dustin, give us a quick introduction. Who are you? Where are you based out of? How long you been in the business?
Yep. So my name is Dustin Zeher. I'm the owner of Horizon Business Brokers. We're a full-service business brokerage and M&A firm in the greater Washington, D.C. metro area. I live in Northern Virginia. I've been a business broker and advisor for 20 years, primarily working the Main Street and what I call the upper Main Street and lower middle market, working with all different types and sizes of businesses.
So most buyers focus on the asking price, and that's important. But the truth is, the real fight is in the ad backs. Getting those wrong, and it totally changes the valuation, the justifiable price, and the ability to get financing for it. So, for someone who may not know, as a buyer trying to learn more about going through buying their first business, what is an ad back? Even just let's go down to the very basics. What are ad backs, and why do they really matter?
Yeah. An ad back is an expense that the owner has run through the business that reduces the reported profit and ultimately their tax liability. But it isn't necessary for a new buyer to pay going forward, or at least that's the belief, right? So they matter because they help show the true earning power of the business. As a buyer and as a lender, you want to know what the business can actually produce in an owner benefit after all those adjustments. And these adjustments can be for health insurance, life insurance, 401k, normal add backs and adjustments, right? Your typical add backs like interest and depreciation and amortization. But there's certain things that might be told to you that you're going to want to look deeper into.
So let's dive into that a little bit. Like, what is a general list of real ad backs that you would say this set of ad backs are generally safe versus the fake ones or the sloppy ones? Or because let's be honest here, there's a lot of business brokers out there that are just honestly, they're just bad. They come up with some silly ad backs, some really strange justifications that really shouldn't pass as an ad back and certainly aren't going to pass when it comes to due diligence or bank financing. So from a buyer's perspective, how do they go through and figure out which ones are real and which ones are the ones they should ignore?
Yeah. The real ad backs are certainly looking at what an owner's salary may be above market replacement if you're looking at on a, like an adjusted EBITDA basis. But personal expenses like car leases, the interest write-offs from car payments that the business may own, as I mentioned before, health insurance, life insurance, cell phones for yourself, for your family. Some lenders may not take the owner's cell phone into consideration, but likely their family cell phone. Other real ad backs could be like one-time legal or consulting fees. Maybe they were exploring an acquisition, or maybe they were in a lawsuit, unfortunately. So these are one-time expenses that the business wouldn't incur moving forward. And then I touched on like the non-cash expenses like depreciation and amortization. Those are all legitimate ad backs that you should be able to verify, and you can decide, are these things that I'm going to implement in my business moving forward or not, right? I guess moving
Yeah.
on to what are fake ad backs or like red flags that you really need to dig into and understand is what may be considered excess labor, right? So like maybe the seller is saying, hey, I work 30 hours a week or whatever the case may be. So I have these extra employees here. If I was working 40 hours a week or whatever, if I was more involved in the business, I wouldn't need this labor. We should add that back. Or maybe they have family members that are operating the business. And that can go both ways. Are those family members actually doing anything to get their compensation? Or are they working and are they getting paid a fair market wage? which would be you would just keep consistent, or are they getting paid a below market wage that the buyer's going to have to replace with a new employee at maybe it's 20 or 30,000 hours more a year, or whatever the case may be. So you need to really dig into those types of situations. Also look into, they may claim that they have an extra space that they have, like a lease, right? They have too much property. If I carved off this extra 2,000 square feet, I have 3 commercial units, condos that I rent, but I only need 2 of them. You can discount this $40,000 a year expense for a lease. As a buyer, really dig into, do you need all that space? You might not need it all year long, but there might be some seasonality to that business where you, in fact, need that space to operate from. Don't always take that at face value. Whatever you think might be aggressive that they're asking for, like the lease, labor add backs, ask for documentation. Can it be verified? Do you reasonably think that you're going to be able to continue to operate that business without that expense? And aggressive, excessive spending could be meals, entertainment, travel. Because look, a lot of business owners do take travel because they go to conferences to level up their experience and they're in the industry. Sometimes those tend to last a little bit longer. Take those extra liberties to be with your family, and you can write those off through the business. So not uncommon for those things to happen, but take into consideration what's fair and what's excessive. And one other fake ad back that really gets to me the most as a business broker, and I think nabs a lot of buyers in the end because they just don't understand how it works, and sellers also don't understand how it works as well, is the bad brokers and sellers that don't know what they're doing are also trying to add back distributions. A
Yeah.
distribution is not an add back in any way, shape, or form. Those distributions are the distributions of the profits that you're already accounting for in the net profit of the business. And oh, by the way, if you have a negative earning year, you can still distribute money to yourself if you've put equity into the company or if you have retained earnings from years past. So distributions are not add backs, everybody.
Yeah, that's great. Here's one, since we're talking about ad backs, like pet peeve ad backs, a couple that I see that drive me crazy is when brokers or sellers try and add back multiple partners' salary. So you got two partners that work in the business, and each of them is making up, pay themselves $100,000, and the seller or the broker tries to add back $200,000 because both partners are exiting the company. The problem with that is one buyer can't typically do two people's jobs. So you can add back one owner's wage, but then you have to factor in the fair market value to replace the other owner and then only add back the difference. And it could go either way. Maybe they're underpaying themselves and you have to factor in a higher general fair market wage that it's going to cost. Or maybe it's vice versa. They're overpaid and there's a slight add back here. But double partners don't necessarily mean double add backs.
Exactly. Hear it all the time, and you're exactly right.
Yeah. Something that I always tell my buyers as I'm talking them through it is you want to be able to pay a good rate for the business. And rate, I tell them rate is an acronym. It stands for this is how you determine a legit add back. The legit add back test is remember rate being R for reoccurring. Is this a truly reoccurring expense or is it, and you got to dig into that a little bit. A reoccurring expense every second year, I don't know, maybe that's an add back, maybe it's not. If you got repairs of equipment that historically shows up every other year, you'll have to decide if that's reoccurring. But back to the acronym, rate first is reoccurring, find out if it's reoccurring. A in the rate acronym is actual. I need actual proof. Can I tie it to a bank statement, an invoice, a contract? I don't want to just hear that it was magically stuffed into cost of goods sold. T in the rate acronym is tangible. Is it something you can measure, not something vague? Oh, this is to your point. You gave the example of the owner saying, if I really worked more, I would then need less payroll. So we got to add back. That's too vague, at least for me, from my perspective. I want to be able to really have something tangible. And then finally, E on that RATE acronym is explainable. I need to be able to clearly defend it to a bank and to a potential due diligence team that's going through helping the buyer without confusion. And so that rate test, reoccurring, actual, tangible, and explainable, really helped me explain to buyers what can be pushed as an ad back, as a legit ad back, and what maybe not necessarily an ad back, or without getting overly aggressive on it. Any thoughts on
I've
that?
never
Anything
explained that
you'd
way,
add
but
to that to make it better?
yeah, no,
Yeah.
I like that trick. I've never heard it explained that way. But yeah, when you're looking for real ad backs, is how do you test it, right? If the buyer won't need to pay it and it can be backed up with records, it's a valid ad back, right? If you can look at bank statements and credit card statements and payroll and invoices, again, ask yourself, is this really discretionary? Is it required to run the business? Test all this out and you can see if they're legitimate. And then that'll give you the confidence as a buyer to decide, yeah, this is legitimate. I don't have to have this cost and it's going to flow to my bottom line and I'm willing to pay value for that.
Yeah. How do ad backs affect valuations and SBA financing? What does a buyer need to know as to why ad backs are going to be relevant for both of those items?
Yeah. So, look, if you have more ad backs and creating higher cash flow, then that higher cash flow is inherently providing a higher value and sale price to the business, right? This is all, if this is overstated or if these ad backs are fake and they would inflate the value unfairly, then when the lender goes to look at the business and the true cash flow performance, it's not going to be able to service the debt from the acquisition. And then with lower cash flow being determined, you're going to be paying a higher multiple than that business likely intended, right? So the math's not going to math out. And if you don't verify this and you end up coming out of pocket just because you really wanted the business, then as a buyer, you're putting yourself in a bad situation because that next buyer is probably smarter than you and going to figure it out, right? Definitely want to make sure that you're properly identifying ad backs that the banks are going to take into consideration because they're going to scrutinize everything. They want the proof because they're underwriting the transaction and they want to make sure that they get paid. And you're successful. So follow the bank's lead because they're not going to steer you in the wrong direction.
So speaking of that, it's an excellent point, making sure that you ask for proof. What's the best way to ask for proof of ad backs? What does a buyer need to really see or to validate an ad back, and when do they need to be careful of a seller or broker saying, "Oh, this is an ad back," but and then they give some story as to why they can't validate it or show proof?
Yeah. So look, be direct as a buyer. Ask the seller, prove to me this is an ad back. If it was a personal vacation, additional payroll, the 401k, the IRA, whatever the case may be, you just ask them directly, professionally, nicely. Can you show me the documentation for this ad back? Do you have an invoice? Do you have the payroll record? Do you have this expense? We literally right now are going through a transaction for a child care center and they're doing $2 million in revenue. Cash flow is almost $500,000. They have about $130,000 of personal discretionary spending that's run through their Amex card. I'm not saying this is right or wrong, but these are things that happen in real life. And we're going to give that buyer every opportunity to look at the Amex statements and really look at the receipts from those purchases. And they can say, that was a $50,000 aquarium that you purchased that wasn't business related and that you could take that back. So just getting the documentation, there's got to be a paper trail for you to essentially, in my mind, get comfortable with it.
Yeah, and the biggest challenge on that, when it comes to that example of a big one-time expense, the $50,000 aquarium that they can clearly see is not installed in the business, might be in their home, that's an easy add back. But the challenge is when you get sloppy sellers who give themselves or their spouse a business credit card and they're running their whole life through that business. They're going to Costco, they're going to the grocery store, they go to the gas pump. And all of a sudden now they say, oh, we really have $40,000 a year of personal expenses, but it's made up of 2,000 transactions of everyday life. I don't know how you approach it, but I tell my sellers when I'm dealing with sellers, I'm like, look, we're not adding back, we're not going through and adding back every single one of those little expenses. You got the benefit when you wrote it off, but we're not going to add up every single time you went to the grocery store and filled up your gas tank.
Yeah,
How do you approach that?
yeah, I tend to agree with you, especially in certain industries where you can get away with that. If you're running a restaurant or a convenience store and you're like, yeah, you can go to Costco, Target, and you can make all these purchases and run it through your cost of goods line item, right? By the way, if you run all these personal expenses through your cost of goods line item, there's no chance that a buyer and or a lender is going to take them into consideration because they really can't identify and delineate and confirm with 100% certainty that was not a business expense. I agree, and I tell them the same thing, especially like when you have sellers that have unreported cash in their business. I liken it to the same thing. You've taken the benefit of having unreported cash for the past 5, 10, 20 years that you've owned the business, and you've reaped that benefit. You haven't paid taxes on it. So you're not going to make your cake and eat it twice, right? Be thankful for that opportunity, but a buyer is going to pay for what they can see and identify on paper without too much hassle.
Yeah. Can buyers use ad backs, or maybe they discovered ad backs that were too aggressive or overly sloppy as a negotiation tool?
Yeah, anything's up for negotiation in a business transaction, as we all know. But yeah, if a seller is making an unjustifiable add back, then as an intelligent buyer with good representation from a good broker, an M&A advisor, an outside counsel, it's totally reasonable to come back and say, hey, this is not a legitimate add back. We're not going to value the company including this add back. This is really what we've identified as fair and reasonable single owner operated cash flow. And here's a fair marketable offer for your business.
The reason I asked that is I literally just before we jumped on this had a Zoom meeting between buyer and seller where we did that exact same thing. I'm helping them through the transaction, the buyers in this case. During due diligence, they discovered that there was some back pay owed to the employee. There were a couple other expenses that were not really factored in that should have been. There was one add back that was, everyone agreed that it was probably too aggressive and wouldn't be supported. And so we went from a agreed upon $500,000 asking price down to $460,000, having explained that, look, we have to factor in the additional pay for the employee, the back pay, the promised rate now going forward, the additional add back that is really not truly an add back. And so that what we did is we agreed upon a market multiple and we didn't change the market multiple. We just changed the seller's discretionary earnings figure, updated it, and now justified a $460,000 asking price rather than $500,000 asking price. And so we simply went to the seller and said, here's our rationale, here's our justification. We agree upon the multiple, and you know what? They agreed. And so we updated everything, amended the purchase agreement, and have closing scheduled for the 15th of this month. And so doing those type of really good ad backs can make sure that the buyers are walking into something where they're not overpaying for the business.
That's a great real life example. I think that happens frequently, or at least it should be as the buyers are doing their due diligence, right?
What role, if any, and I have my own opinion here, but I just want to ask you, but what role, if any, should a business broker play in vetting ad backs for before a deal goes to market and then for a buyer, if they're either side of it, whether it's sell side or buy side?
Yeah, I think any good broker that is trying to have a successful career and maintain a good reputation should be calling out their sellers that are asking for these questionable ad backs. But again, sellers don't know what they don't know. They perceive everything as I've paid for this for my business, and they just want to add back everything that they possibly can because they're coming to the understanding that the more ad backs that there might be, the more cash flow there's going to be and the more value there's going to be. The good broker that knows what they're doing need to tell them, no, your distributions are not ad backs. No, you cannot reasonably try to get this expense or that expense. They might say, you know what? Okay, maybe that's worth fighting for. Maybe that might be a legitimate ad back. But no, you might get some pushback. Like you're talking about the cell phones or you're talking about personal vehicle write-offs, right? Because maybe they use their vehicle for the business, but it's also their personal vehicle, right? So a buyer may want or need that benefit. So it just depends, right? So as a good broker, just give the correct advice that you know that a lender is going to get behind and support, and that a buyer is going to reasonably be able to verify. Because at the end of the day, aren't we all trying to do good deals? You sell them a good business, and then they operate it for 5 or 10 years, or whoever, and then they come back and they ask you to sell their business and introduce you to all these people. If you're not advocating for a client, buyer, or seller, that's just not going to happen for you.
Yeah, I agree 100%. Any war stories you want to share? Any ad backs that killed the deals or killed valuations, or any real life stories come to mind?
Man, 20 years and 400 transactions, which I know is a far cry from all your transactions, Mr. Number One. But anyway, I can't think of anything off the top of my head other than going back to what you said earlier, about these partners, right? It's just that I think help kills deals before they start, and that's okay, right? Like when these partners come in and oh yeah, you're not taking both of our salaries, and like the cash flow is not $500,000, it's only 300,000, and they're just not getting the value out of it. So I'd rather have a false start than give false expectations and have no deal. But
Yeah,
no,
exactly.
I don't have any other horse.
My parting advice for most buyers is remember that RATE test acronym that I'd mentioned. Reoccurring, actual, tangible, explainable. That's the general framework that I like to work from when it comes to ad backs, to making sure that they're legit, justifiable ad backs, and you don't get too sloppy. Any parting advice you'd like to share with potential buyers in this case, or potential sellers? Anything you'd like them to know that we haven't talked about?
No, again, if you don't know, one thing, if you don't know, ask, seek proper counsel. Reach out to your local business broker, your local M&A advisor, M&A attorney. You lean on the professionals. We go through extensive training, or at least the good ones are. So try to get sound advice before you make a bad decision. And I'm happy to be a resource to you and introduce you to any of our advisors in our circle, and I'm sure Trent would do the same.
Yeah, so in case anyone wants to get in contact with you, Dustin, remind them how do they contact you and what market are you in?
Yep. I'm in Northern Virginia covering the DC metro market, Baltimore metro market as well. Horizonbrokers.com is our website. My email address is dustin@horizonbrokers.com. And feel free to call or text me at 571-437-5135.
Perfect. Thanks so much. Appreciate it.
Absolutely my pleasure. Thanks for having me today, Trent. It was fun.
Let me